So it's an enormous milestone for us. It's a very transformational is an overdone word, but it is a transformational business acquisition that takes us from being a sort of junior non-revenue company to one that has significant revenues at a time of elevated prices, which we didn't know going into the deal, and great growth options both in New Zealand but also in Timor-Leste and in the Philippines.
Hello, you're watching Proactive. Joining me in the studio today is Sunda Energy CEO Andy Butler. Andy, great to see you in person in the studio. Before we get started, could you perhaps remind us about the business and the changes of recent?
Certainly, thank you, Stephen. Great to be here. So Sunda is we're an AIM-listed company, but we're focused on the Asia-Pacific region, principally on gas projects in the Asia-Pacific region. So we have now three assets, three main sort of core parts to the business. Timor-Leste, which we've spoken about a number of times, a really exciting exploration project in the Philippines, and now, as we've recently announced, a production business that we're acquiring with upside in New Zealand. And the binding theme across them all is this gas focus across Southeast Asian region, the Asia-Pacific region, where there's strong and growing demand for gas, where there are, like many places, energy security issues, but basically governments that are very aligned, very supportive of companies that are trying to develop gas projects. We have these projects in three jurisdictions that really align with those themes, albeit quite different in nature. And now bringing in a production element to the business gives it that real sort of stability and strength, along with the growth projects that we have in Timor-Leste and the Philippines.
And of course, that was exciting news, your recent announcement, or your entry to New Zealand. Tell us more about what you've acquired and what attracted you to those assets.
Certainly, it's what we're acquiring, so we're going through a process of approvals at the moment. We had shareholder approval yesterday, which was very gratefully received. So what we're acquiring, it's a portfolio of assets. It's an entire business. We're buying. It's a corporate transaction. So we're buying the top company, under which there are several companies, and then there are 5 assets, 5 permits for both exploration and production. Principally 3 producing fields, producing about 1,000 barrels of oil equivalent today, mostly oil, about 80% oil, 20% gas. With a platform, a really good operations team on the ground, oil that is exported locally by truck and then exported from New Zealand to refineries internationally, gas that's exported into the local domestic pipeline network at what are now very, very attractive prices. And also there are peripheral projects, well, not peripheral, there are some additional projects in there, such as gas storage projects. There are some third-party gas processing revenues that will be coming, and some really interesting upside in terms of development opportunities within the existing fields and adjacent to them, and some exciting exploration projects that have the ability to really materially increase the production that's already there.
The acquisition metrics are extremely attractive, Andy. How did you secure such favourable terms?
Well, I think it was one of those situations where we're it's a willing buyer, willing seller sort of arrangement, if you like. The seller is a party that we know well, are going through a refocusing themselves. We were coming to terms at a time late last year and early this year when the oil prices were not what they are today, so that was part of it. But really, it's a transaction that's staggered and that enables us to give what the seller needed, which was a certainty of a transaction. And so the terms were kind of mutually acceptable. But you're right, they're very competitive. At roughly $5.80 a 2p, so that's a 2p reserve barrel of oil equivalent. That's probably about half price when you compare with peer metrics. And it's about 15,000 barrels of dollars per producing barrel, which again is probably about a third of what you'd see in similar transactions internationally. So very good metrics, we're very pleased with the transaction.
So you're acquiring roughly 1,000 barrels of oil equivalent per day, and you aim to double that really in 2 years' time. What are the key operational steps that get you there?
Well, as I said, within that portfolio, there are a number of growth opportunities that can be achieved fairly quickly. The most material of them is an exploration project called Oru, which is immediately adjacent to some discovery wells and fields, and can be tied back to the existing facilities that we're buying. There's a facility centre just a small number of kilometres away, with pipeline permits and everything in place. So that well will that comes in, and it's a low-risk feature, will more than double production. But beyond that, there are fields, adjacent fields that are part of the permits that have been shut in previously because of lower commodity prices, which can now, wells that have already been drilled. So really, it's a question of just accessing the resources through those wells. And a number of opportunities within the existing fields to accelerate infield drilling and workover programs that will get production up. So it's a question of dedicated, focused investment into it, but largely self-funded through, probably almost entirely at these prices, self-funded through revenues from the production.
So Oru 2 is described as low risk, high impact wells, 63% chance of success. What gives you such confidence in this prospect, Andy, and how does success here further enhance the production pillar of your balanced portfolio?
Well, first question, why are we so confident? I mean, as I say, there's a lot known in that area. These fields, they're quite shallow, so the geophysics means that you can actually see quite a lot from the data. They're adjacent to wells that have been drilled, fields that have already produced, and so you've got known hydrocarbons, known oil and gas that is present. You're immediately adjacent to it with very good technical indications that you are at a slightly higher level, and with good reservoirs present. So basically, you know an awful lot about what's around it, and so this sort of 2 in 3 chance of success, it's a very, it's as easy as it gets in terms of exploration projects. So, and as I say, also it's very close to existing facilities. All the permits will be in place for export, for pipelines, etc. So it's not only is it very low risk, but it's a very, very rapid turnaround and very quick step up in production.
Mm-hmm. And obviously this is a big milestone for the company that you have acquired this producing asset. How does the cash flow from New Zealand help to de-risk, first of all, the development work at Chadich, but also your exploration work in the Philippines?
Well, thanks. And actually, I mean, also I didn't answer the second part of the previous question, and it's related. So really, this gives us a much more balanced portfolio of assets. It obviously, bringing in revenues helps in terms of our broader group, the funding of the group, our regular outgoings. The growth opportunities that we see within the New Zealand portfolio are funded, and it contributes significantly to what we're trying to do elsewhere. This sort of overriding theme of creating a balanced portfolio, a balanced business, which is tied together with being in a much stronger financial position from having these production assets. So it's an enormous milestone for us. It's a very transformational is an overdone word, but it is a transformational business acquisition that takes us from being a sort of junior non-revenue company to one that has significant revenues at a time of elevated prices, which we didn't know going into the deal, and great growth options both in New Zealand but also in Timor-Leste and in the Philippines.
Well, Andy, I hope you'll continue to keep us updated with the story. Thank you so much for coming in today.
Thank you, Stephen.
Andy Butler, the CEO of Sunda Energy.